Continue the conversation now. Our next guest says the action in oil and Bitcoin could signal the next move for equities. Joining us on the newsline is Jonathan Krinsky, Chief Market Strategist at BTIG. What signals are you getting, Jonathan, for stocks from oil and Bitcoin right now?
Hey, Sarah. So, let's take a step back quickly. Michael hit on it a little bit, but, last Friday we did close above that 50% threshold of the entire bear market decline, and we know that since 1950, once you've done that, you've never gone on to make new cycle lows. So that's kind of the backdrop. Again, we work in probabilities, not certainties, but probabilities suggest we've seen the lows in June. Now, that doesn't preclude a decent pullback, and oftentimes once you do hit that 50% threshold, you actually see a pretty decent shakeout following that. So I think that's what we're in right now. We tested the 200-day moving average earlier this week, got rejected, and then as you mentioned, there's been some kind of macro cross currents that have not quite jived with the rally in equities. The first being crude oil, which is not really broken out yet, but it's certainly starting to regain some strength. We're also seeing nat gas near 52-week highs. And then you mentioned Bitcoin. You could throw in the ARK names with that as well. Those have been pretty highly correlated to growth stocks, and those have started to diverge negatively over the last week or two. So I think today is a bit of recognition. There's some options expiration activity as well, but I think some of those negative divergences below the surface are starting to come to fruition.
Well, WTI is at $90. So, yes, we've made up some ground, but we're still off the highs. Are you saying the market cares about this one because it is the inflation tell?
I think so. I think it's a little premature to say inflation's over. If you look at the way commodity equities are reacting, energy equities typically lead the commodity, and those are starting to show some relative strength. We're seeing, as I mentioned, natural gas in the U.S. is near 52-week highs. In Europe, it continues to hit record highs. So I think it's, and then let's not forget about interest rates with the 10-year back at 3%. So there's just some subtle signs. We may not go back to the peak inflation narrative, but I think to say that it's, collapsing is a bit premature as well.
Well, it always felt a little treacherous to fight the Fed, didn't it, Jonathan?
Yeah, I think so. I mean, look, I think the rally off the June lows, in hindsight has been a largely position-driven rally. There was, sentiment and positioning were clearly quite bearish at the June lows. I think a lot of that has now worked its way through the market. And now, I think we'll get more of a real sense of where the market wants to go now that positioning seems to be a bit more squared up.
And just to be clear, so you expect a downturn, not necessarily a retest of the June lows, but you expect it to be bumpy from here.
Yeah, I think 4177 to 4200 was kind of the June highs. In a a really strong new bull market, we should probably hold that area if we pull back. So I think at a minimum we get a test of that 4177 level. If you get below 4177, you're probably looking something closer to 3950 on the S&P. I think that's certainly reasonable. And then if you start getting below that, then you have to start asking yourself, okay, maybe this is one of those exceptions to the 50% rule that we talked about at the top of the show.